All right, let's see how this works. Sorry about that. I had to mute my other computer. Jeffrey Scott here, and this will hopefully be an abbreviated HGSI top-down review for, I guess it's already Monday, so that makes today November 25th. First of all, I wish everybody happy Thanksgiving. Let's go ahead and get started. Probably will not be one this coming weekend, as I have a lot of family coming. Just returned from the West Coast, where I got to participate in the Magenta meeting on Sunday through Wednesday, and then the Traders Expo in San Francisco. Magenta meeting was great. It was really a meeting of how to trade. And with Sue, the MACD queen, as I'll call her, gathering a lot of attention, George Lee and myself talking about how to trade growth stocks, and Chris White talking about EdgeRater and how to integrate everything together. We're thinking about doing a meeting in New York in February around the time of the Traders Expo that would be similarly George and I, and we'll see what type of guests we can get. So if you have any interest, please feel free to email me and let me know that you might be interested in coming in February. I'll see how much interest I gather from this response and then decide whether or not we do one live. Jeffrey@highgrowthstock.com is the right email address to use for me. Usual disclaimer, this is for educational purposes only. I'm a doctor, not a broker, and I'm not affiliated with any software company. Anything that I do here is on my own, and I do because of my love in trading and love in teaching, and I like to give back. I use a lot of different programs routinely, but at the end of the day, what I really need to see is a real-time charting platform of which I can get by with TradeStation or Thinkorswim. I use both, as I've got a lot of work done on both of them for some personalized setups. I need an aftermarket analysis, of which HGSI is the best on the market. I use EdgeRater for market timing and a few other things. And then seasonal analysis. I'm a big fan of Magenta. Made some money on a trade during the week of Green Mountain Coffee Roasters, and maybe if I have time, I'll show you why I took that trade, and also took a trade on AIR. Out of the coffee ones, I had set my stop and got stopped out actually the same day it gapped up, but it was a nice one-day return. Don't recommend it for the faint of heart, and also use a lot of Ian Woodward and Ron Brown's techniques. I'm actually thinking about, if I had to write a book, I'd probably call it Being Your Own Guru, because I think that's the most important message on this slide, is find those people that you think have a lot to offer, learn the best you can from them, integrate it and synthesize your own methodology, and then don't listen to other people, listen to what you learned. And these are just some of the folks that I've learned from over the years. Website as listed here. If you are a Magenta user, frankly, if you're not a Magenta user or you are a Magenta, regardless, I'm going to be doing in December weekly live calls where it won't be about the market as much as it will be about how to maximize the value of the software program. So if you do not own high growth stock, HGSI, I would strongly suggest a 30-day trial. Email me so you get on the mailing list, and I will invite you to those training webinars. If you're a Magenta user and you signed up at our recent meeting, you'll be getting a message through the Magenta website, so don't worry about it. So on that note, let's just take a quick look at the market, make some comments, and say goodnight. Those who know me know that nothing is quick. So as people know, I like to look at the market. Let me pull up a couple spreadsheets. I apologize for that to me. And get an idea of where we came from and where we're going to go. This was a week, really, to me, of a very bifurcated week. Being that I was going up to a meeting, I sold a lot of my short-term positions at the end of last week. It was probably a good thing, because if I had kept my same portfolio, I would have been down about 1.5. But as I mentioned, I sold a lot of positions. The S&P 500 was up mildly at 0.37, and just from a high-level view, you can see kind of a 50-50 and perhaps a shift towards stocks doing worse. The stocks that I had last week had a horrible week, down, as I said, about 1.5%. Remember, they were up 4% the prior week. So, and since I was traveling, I did get rid of a lot of my short-term positions. So we'll see what this week brings. No, Hindenburg came in. I always like to look there. But Bucketology, I want to concentrate on 3 pictures. The first picture is where we're sitting, and you can see we're starting to get some stocks in the S&P 1500 accumulating above the upper band of the Bollinger Band. That's the kind of thing that starts to get me nervous about being overbought. But I have learned, as you can see in this slide here, where it's over 30%, we can get a whole lot more overbought before this market has to correct. And we may just get some backfilling and sideways movement to correct it as well. And if you want to know what a bearish market looks like, we had 12% below the S&P 500. It was funny because George Lee was talking about how he sold out everything on the 8th of November because he likes to sell, well, not everything, but he sells out his options and short-term positions before he travels, and he took a week of vacation before the meeting, and that was the bottom of the market, and the market started going up from there. This is another scan within EdgeRater, and maybe next week I'll spend some more time on this, but you can see we had a number of kahunas come in the market on the 21st, which was then Thursday, and all of our markets turned to green on Friday. Down here in the Ian's bullseye indicator, yellows and greens, the reds seem to have gone away for a couple of days, so strength in the market there. Lastly, I'm not going to spend much time on this, but one of the greatest things that we've got in the George Lee indicators now, or in EdgeRater, is the George Lee signals, and you can scan daily, weekly, or monthly. And you can see here are a number of stocks with multiple breakouts occurring out of the squeeze, and Comcast sort of leading the way. Not big surprise because there's some major mergers and acquisitions going on in that space. A couple of stocks that I've been following or might own: Wisdom Tree ETF, also had pocket pivots, mobile breakouts, and a parabolic stop and reverse signals in a squeeze, which is very bullish on Friday. Bristol Myers Squibb breaking out to a recent high, looked very good. Terex in the building world, but great fundamentals, great earnings growth, also looking special. All right, on that note, let's take a look at what we see from the market signals within the elder indicators. Here's the S&P 500 at the top of the envelope. So we had a pullback to the midline and then a big move up the last 2 days. So Monday, Tuesday, Wednesday down, Thursday, Friday. Now Friday and Thursday both closed near the high of the day, which is bullish, which is sort of the opposite of Tuesday and Wednesday, where they ran up and fell back as the day went on. Now I realize there's a bit of a delay here, even with high-speed internet. If I look at the weekly and the monthly on the S&P 500 are green. I look at the small stocks. These are the ones that got hurt a little bit more. And you could see Tuesday and Wednesday you had red bars on the NASDAQ. We continue to have MACD divergences. We're starting to make higher highs without even breaking the midline. On the histogram, the line's going. So that tells me that the pressure on this move up is not as much as it was in the past. So that could be a potentially bearish signal. Looks like we're green on the daily, blue on the weekly, green on the monthly. So the NASDAQ much better than it was midweek and below the upper envelope. And then lastly, big stocks. Two-day pullback, big move up to the top envelope on Friday, green across. So Elder is telling me caution with higher highs and not higher highs on the MACD histogram. So certainly we have concerns about divergences. And let's take a look at what else we could find. If I go into HGSI, let's start with a top-down review. And I'm showing on my call that we've been doing this about 9 minutes. And I am going to try and make this less than an hour today because I have to process it before I go to bed. And as you can see down below, it's late. All right, so let's go into Woodward and Brown user groups, which will be down on the bottom. Let's open that up. Major Markets Plus, top-down view. And we can see small stocks ended the week at the top with the small cap 600, the NYSE, the Russell 2000. Also big stocks with the Dow, the NASDAQ at the top. and down at the bottom where they've been for quite some time, silver, gold, and volatility. Take a quick look at a couple of these. S&P was in the midline, up a little bit for the week, as we talked about earlier. So, you know, if I looked at this, we've got a nice steady increase. Nothing's really changed. We're at the top of the Bollinger Band, certainly a period of time where one might expect a reverse. But we're not at the top of the high jump bar. We're green on the bongos. There's no elder force because there's no volume. Nice steady uptrend. You know, it's funny. I listened to Gil Morales and Chris Katcher on their webinar on my flight back from Vegas. And they talked about how hard it's been to make money in this market. It's been an easy market for me to make money. But I think it's sort of a symptom of how I trade in that I like to take a lot of positions. I get stopped out of a lot very quickly, some with small wins, some with small losses. And I like to have some of those positions become much longer term holdings like my Celgene, my Gilead, et cetera. And those that I've held for over the past several months have just had a fantastic performance. And I think this has been a buy and hold, not a buy and forget, but a buy and hold market. But as this market becomes more and more overbought, as we get through the typically strong holiday season, I think we have more risk. And not to beat a dead horse, but I mean, for those that don't believe what I'm saying about this being a very strong market, I'm just going to do one little chart here, and we'll go from this green candle low up to the close on Friday. And I see we've had a 34% return. And this is from the beginning of November to the beginning of November. I call that a super, super strong year. And let's just see where we go the rest of the year. So very quickly, for argument's sake, let's take a look at the NYSE. A lot busier here because the pocket pivots show up because you do have volume here. And you can see up at the top of the channel a nice steady uptrend, but certainly not extending to the point where it's got to come back right away. On the NASDAQ, now, that's not to say that we're not going to get a pullback, and we'll sort of expect, but, you know, a nice little move up. Here's a 3-day correction, 2 days up, kind of back at the recent highs on the NASDAQ. Had a kahuna on Thursday. Everything's green. Again, not so extended that I'm expecting it to snap back, but certainly at risk of this length of a market move. Russell 2000, whoops, wrong way. Same thing, nice steady run, but really not far from its moving averages. And let me just clean off some of my trend lines I've written before. And, you know, as much as I'd like to say this market is way overbought and at risk of rolling over, is it? I mean, what you see here is a nice steady uptrend and not that extended. So let's see if we can't get a nice little rally into the holiday season, although we'll rally until we stop. If we look at gold, this is what a non-rally looks like. Failures at the 50 several times, just languishing down there, nothing to be interesting there. Silver, the same thing. Yes, eventually it's going to hit a bottom and snap back up, but I don't know when, and why would I be buying it before that happens? Volatility, sitting around here low, but not at the lows. It can go lower. And without volatility spiking up or showing anything, we might expect to see another couple of days of good market. You did get a little bit of a spike on Wednesday, but frankly, it couldn't even get above the 200-day moving average. So VIX remains tame and under control. And the dollar index, also very tame and under control, although it did get above the 50. Got a long ways to get to the 200 and might expect to have some resistance there as it has had in the past. So from a market perspective, except for the MACD divergences, I'm still bullish. Reality is we've had a huge run. We've got those divergences, and that's the negative going against the very positive seasonality as we go into the end of the year. If I take a look at what industries are working, I don't want to do it that way. I'm sorry. Well, that one's working. That was airlines. Whew. Guess they've gone from crap to investment material. So 145 groups. If I look at a performance over the last several weeks, one can see that department stores have been leading. If I look at just over the last 5 days, banks on the top, home furnishings, biotech, managed care, life and health, so a lot of healthcare related stocks up at the top. The laggards over the last computers, electronic retailers, so I guess Best Buy, Cons, gold, precious metals, home improvement retailers, marine index, internet retailers, oil, gas, drilling, that's where the weakness was last week. Let's do what I like to do, which is look at force up, and let's say 104, we're back up to 81 groups. Very bullish thing compared to where we were, so that's a big improvement. We had dropped down, I think, to about 30 last week. So up at the top is food retailers. It's interesting because there were some bad earnings, I thought. Take a look at the index group. Now, all of them are below the index group, and that would bother me. So here you have a pretty strong pullback to the 200-day moving average. Kahuna after a bongo. Big earnings coming into the stock. Well, this is actually kind of interesting looking. So you got a stock that's been in a downtrend for years. It failed here. My concern is you failed twice at this 200, which is about 7. Why would I expect this time to be different? So I don't really see it here. It's an interesting pattern. I like the pullback, but it's been in a long-term downtrend. Safeway, uptrend, pullback to the 50. Don't like the earnings per share growth, but the chart pattern that looks a little bit better. I don't think it's that exciting. And Kroger is a little more shallow, pull back to the 50, certainly setting up for a squeeze here, and a break above this level might be intriguing, although not great earnings per share growth. Again, all of these were below the index. And you know what? Cardinal sin. You had to hit raw combo, so let's start that over. I didn't think that looked good. All right, biotech, the leaders for the week. No surprises here, and boy, we talk about all of these. Let's just go through these first 5. I think it was either, let's see, was it last week I remember talking about Biogen IDEC at free parking, which is the 50-day moving average, and said compelling time to think about the stock. Bible gap up on Friday, probably has more room to go with a European approval of their blockbuster oral MS drug. Love this drug. Great earnings per share growth in the pharma sector, and this is one that I believe has more room to go, and there's a reason why it's one of the top-ranked stocks today. Here's another stock that I've been talking up for a while, and thinking about it, I started talking it up way back here, but reality is it broke out with a pocket pivot and a kahuna on Friday, with some also good news in the EU. Certainly a leader historically in the HIV/AIDS world, some nice hepatitis portfolio, and now moving into oncology. If you think about pharmacyclics, PCYC, one of the big leaders, they have a drug in development that may be better than the drug that just got approved for PCYC, and that's why I've been pounding the table for weeks on Gilead. Celgene, as many of you know, is a big holding of mine, breaking out again. Also got some good EU news. Regeneron is pulled back to the 50. Had a DI crossover and a kahuna. It may be setting up to run again. I don't like the earnings per share growth, which look like they're slowing down, but there certainly is a stock that's been getting a premium from the market for quite some time. Doesn't look as viable as the last couple. And here's probably the wild card in biotech. This is Celldex. They have a nice oncology portfolio. Had a big run-up, as you can see, in late September on some pretty impressive volume, and then came back hard as biotech corrected. And it looks like it's setting up to run again. It had a couple kahunas, which Ian has taught me means something, breaking above the 50-day moving average in a strong group, and that might be a way to play biotech without taking a whole lot of risk. So biotech looks good, and that's why I looked at 5 stocks there. Next thing down, other diversified. So banks, and these would be the big guys, and again, one of my holdings, Bank of America, was up nearly 5% for the week. At some point, these things are going to need to give a breather, but they've got earnings coming in. Rising interest rates may not be horrible for banks. Certainly the regional banks, I think, do better with rising interest rates. We're breaking out to multi-year highs here, and there's some earnings momentum in this stock. And you can see after the big debacles down here, you've had a run-up from about 5 to 15. So profit-taking always can occur, and the other thing that happens in any of these stocks that have been in nice long runs is the analysts sometimes start to put downgrades on them based upon price. So we'll see if that happens here, but a nice run up, multiple pocket pivots on Bank of America. Here's Citigroup. This is the kind of place where if I'm a whack-a-mole guy, it keeps getting beat up here. So it's going to have to take out this prior high from back in July before I'll get interested. Maybe we're going to get it this time. JP Morgan, I pounded the table here with all these 200-day hits, and what a nice call that was as the markets had a nice straight move up. Getting to the point, multi-year highs as well. Be interesting to see where this goes. I still like Bank of America. They seem to have more earnings per share growth, but JP Morgan is JP Morgan. Yeah, they always survive. Cable and satellite, there's some major M&A discussions going on. And as we saw with airlines, when you start to take out some of these, you start to have pricing power as the airlines. So Time Warner, big jump up on Monday. I don't really know how to play these things because these are M&A driven, but a viable gap up on Time Warner. Comcast, pocket pivots, DI crossovers, Kahuna's volume. They're one of the ones that's involved potentially in buying Charter. Here's Charter, which had pulled back. That looks like it wants to take out. This is the big kahuna for people to acquire. It's not cheap. For $13.6 billion market cap, $135 stock, but it had pulled back, had a pocket pivot at a kahuna on Friday. See if there's anything in here that looks interesting. So those are the cable providers. There are a couple interesting content companies as well. Back. Airlines, as I mentioned, these guys continue to look strong. I don't know which one to pick. I'm in Delta, and I'm going to stay in Delta. Multiple pocket pivots, everything's turning green. Lower left, upper right, clearly a leader of this market. United, less impressive earnings per share growth, but a big bump up here. And then you all know about US Air getting permission now to buy American, and a big steady run there. These are turned into investments and no longer just ways to lose money, and I've been long Delta for the year, and I think it's doubled. Regional banks, as I mentioned, these might do well in the setting of rising interest rates. Lots of them look similar. The charts are not that great. The earnings per share growth are not that great, but they're up there as a strong group, and they might be something to look at. Everything's green here. Nice run up here on Fifth Third, but I don't like the earnings per share. This is the index. PNC is another one, shallow pullback, breaking out here. Kahuna followed by pocket pivot. Again, not great earnings per share growth. Probably need to own one or two of these if you don't have them in your portfolio, but I think you'll find that they all look similar. You'll pick the one that you like. Not only are the networks doing well, we have some movement in the telecom communication sector. Let's just see if there's anything here that looks interesting real quick. Kind of a loose-looking chart on Qualcomm. Earnings per share not very impressive. Aruba Networks under the 200, who cares? Juniper, downtrend, breaking above the 50, but still got overhead supply. Not liking this group. Nokia, I think this is all just driven by selling off their handsets, but if I had to pick one, I like the earnings per share coming into the stock. It's had a nice run, but frankly, I don't like this group too much, so let's get out of here. Back. Oil, gas exploration. The little guys continue to look interesting. I'm going to try and put on the HGSI board some groups based upon the type of shale locations. Thought that looked kind of interesting. Let's just take a look at a couple of these. These guys had all pulled back over the last couple of weeks. And maybe some of them are making a stand. Here's Gulfport, not quite to the 200, pocket pivot, Kahuna. Gets above the 50, I might start to pay attention. Still has a ways to go. Cabot Oil and Gas, again, downtrend. Looks like it's going to turn around. It's still got the 50-day sitting on top of it. Southwestern has broken above $39 stock. It's got earnings per share growth, but it's still, as you look, really in a sideways pattern. How do you get excited by that? Gas Star, don't know anything about this, but I like the chart the most of all of them. Oil, gas exploration. Do your own homework. Probably doesn't have a whole lot of average. It's got 800,000 shares. Lower left, upper right, breaking out two Kahuna's volume and a viable gap up. I'm just going to take this little puppy and put it on my list of something I'm going to watch. We're going to call that Bible gap up. We put it on my buy watch. I didn't see this one earlier. Didn't hit my screens, but I like it. Although it is a little tibbler, and I've got to do some research. Ultra petroleum. So you see the pattern. They're all sideways. They've all had pocket pivots in this last couple of days. Starting to look a little bit more interesting. Next group down, drug retailers. So we've got Rite Aid, CVS, and Walgreens. There's some really big changes going on in this group. Probably the only pure play drug retailer is Rite Aid, as CVS has a big pharmacy benefit management and specialty pharmacy division called Caremark, and Walgreens now is kind of becoming a drug distributor as they bought a Boots, which is a European drug chain and self-distributing entity, and they have a 35%, I think, stake potential in AmerisourceBergen. So they're all different. Don't really love the fundamentals here, but it does make money going sideways. I do like with a couple of kahunas coming in by the 50. You've got a squeeze setting up here. Look for a mobile breakout in Rite Aid this week. That might be interesting. Here's CVS off the 200. I love when stocks do this. Up to the 50, paused and running again, starting to get extended. And Walgreens, which I mentioned, really a great run. This is really a fundamental difference. I've been in the distribution business. As one of my companies, or two of my companies were acquired, one by ABC, one by Cardinal. And Walgreens' interest in self-distribution really shook up the marketplace and led to a really interesting deal with AmerisourceBergen, where they moved their distribution business there, all public, but also took a stake in the company. So it'll be interesting to see what happens. Only pure play Rite Aid, and except for Rite Aid, they're pretty extended. Pharmaceuticals, I really like Bristol Myers Squibb. I took a position in this not too long ago, and you could see had a run up here, sort of a shallow pullback going sideways at the 17, a kahuna, everything is green. They've got some really exciting drugs coming in the market for oncology, and I think they're starting to get noticed. Be interesting to see if they can run out of this pattern, squeezing here and breaking out as well. And then one thing about Bristol Myers, probably pays a little dividend here, about 2.6%. That was my favorite of the big pharma space. A couple other things did stand out to me. Valiant looks like it might be setting up. It had pulled back to the 50. As you know, it's been a steady uptrend. It has not. I'm jinxing a stock I own, which I hate to do that. But in the last year, almost a year, it has not violated the 50-day moving average until this, and it's just a little bit of a violation, the porosity here. It broke above the 50. It's got a pocket pivot, had a DI crossover, probably setting up for another buy opportunity. Great earnings per share growth in an industry of drug companies where there isn't a whole lot of earnings. You see if anything else popped up on my review? Nah. So Valiant's ones you might want to take a look at. Then asset management and custody banks, a lot of these showed up. WisdomTree was actually one of the highest rated stocks on my list this weekend. Kind of getting loose in here, but pulled back not quite to the 50, pocket pivot, huge value coming in. Kahuna, all green, and the CEO is married to Maria Baltaroma, whatever her name is, from CNBC. So it can't be all bad. Look at the great earnings per share growth, and it trades at a multiple of 47, doesn't pay a dividend. I think that's an interesting chart here. It's at a place where it's seen resistance. We'll have to see a break above that. Blackstone is one that I'm holding. I like it because it's got some earnings per share growth coming in the next few quarters beyond. Good place to look at it. Pull back down to the 50. I hate when I say don't know anything about this puppy here. BlackRock, Kelso Capital Corporation, a couple of kahunas breaking above the 50. It's going to have resistance here, so that might make me put a buy stop above that 200-day moving average. Pays a 10.7% dividend, and it's in a strong group. Groups to the downside. Oops. Apparel, construction materials, REITs, home builders. So you know where you want to stay away from: REITs, home builders, and construction. And apparel has really been a mixed bag. All right, next I like to look from the sort of more of a bottoms-up perspective. Let's take a look at any stocks that might look interesting, and I'm not going to go through all of them. So just to show you what I would do, I would look at all securities, and I would go up to, I'm going to use the regular one, Woodward and Brown, Archive, and people are saying in the home, miscellaneous, Sprinters. Here is 74 stocks you might want to take a look at. Biogen, Celgene up at the top. McKesson is one of those distributors I mentioned. You can see breaking out here with a pocket pivot and a kahuna, slowing earnings per share growth. But this is a great company too, operator excellence, and a great IT infrastructure. The big three, Amerisource, McKesson, and Cardinal, all are incredible operators that take cost out of the system, something we need more of in healthcare reform. Very quickly, see anything else looks good here. Principal Financial Group, this has been in a power move, lower left, upper right. Don't know much about this company. I guess it's an insurance company, pays a 2% dividend. What a power, lower left, upper right with the pocket pivot up at the top. Prudential, financial inflation, retail, more life insurance. So you can go through this list and look and see if there's anything here that interests you. There's another distributor. CBOE has been a great stock. Zone has had a big move up and pulled back last week. So one thing I like to do is look at the sprinters. I'll leave that on your own. I also would like to run a group inclusion filter. So let's look at my top 30 stocks real quickly. I know people like it when I go through stocks, so I'm going to do that right now. But I'm not going to go through how I got them because I talk about it all the time. GIF All-Stars, let's go to, all right, so here's my top 30, many of which we've already seen. So we're going to go through very quickly. Here is Gentium SMA. I like this a lot. Small biotech company, doesn't make a lot of revenue, but it's growing. Its earning is growing. Trades at a multiple of 100, but very fast earnings growth rate. Looks like it wants to run, and this is a stock I'm going to be following, maybe getting into. Biogen, we already talked about. Great leader, Bible gap up. Ligand, this is a company that was not a great marketing company, but it's a great licensing company that they have royalty payments on a lot of products, including Kyprolis, which was the reason why Amgen bought Onyx. So this is all about looking at the return on investment. They've got some earnings coming in, and it's about royalty play more than anything else. It's been kind of loose up here. I think the earnings are going to drive it higher, but you have a chance perhaps to wait on that. Santoris is a buyout, one of our favorites. Wisdom Tree we already talked about. Repligen is a small biotech. I think I showed you something I like better. Had a reversal day on Friday, red candle high, big volume down day. Maybe it's just profit taking, no earnings there. I probably would pass. Alexion is another biotech, lower left, upper right, but loose. This drug has been a leader for some time, and I think, plenty of opportunity for it to run again. I like Celgene and Gilead more. Lanet is one that we've looked at several times, a generics play up at the top of the channel, but my guess is this thing goes higher on just fantastic earnings per share growth. FleetCor, this is a card processor and I think service stations for the trucking industry, lower left, upper right. That's some of this and some of my longer term accounts. This is what I like to hold on for a long time. 50 has been support. It's a little bit above the 50 right now, but it looks like it wants to run again with the pocket pivot. And this is what I think is referred to as buying add-on days if you're long, and something you might be thinking about if you're not. Wolverine Worldwide, I love Wolverines. I'm a Michigan grad, but they really suck this year as a football team. But the stock does it. Nice move up, pocket pivots. It's in the shoes. I don't totally understand. The earnings don't look so great going forward. I'd want to look at the read the news and the fundamentals. Jazz, I did not put it on my list earlier today to show you, and the reason is it's pretty extended. It's got a red candle high at the high jump, so I expect a pullback down into this range. But what a big move up it's had. Now, the reason why I do like it, and I talk about it all the time, is because it has an Ireland base, and a lot of these stocks based in Ireland have become takeout candidates because of the tax rates. It trades about $750,000 a day, and its market cap is only $6.5 billion. So It wouldn't totally surprise me to see a Valiant or somebody step in here. Valiant's digesting Bausch & Lomb. Maybe it's an Endo, but Endo just bought a company and moved to Ireland. But that Ireland thing is probably the key. The earnings per share growth don't hurt either. New Skin, I don't like this one. It's too much like Herbalife and the multi-level marketing. But certainly as everybody else likes the stock, I wish I didn't have feelings. And everything's green here. Kahuna's in volume on Friday. Looks like it wants to run again, breaking through the Bollinger Band. InvestNet, another beautiful lower left, upper right. Pocket pivots, everything is green. It's got earnings, one you might want to take a look at. Homeowner Choice, this is another insurance company. We saw the principal. I think insurance companies have been doing quite well. Extended and reducing earnings. Take a look at the fundies. Last week I mentioned when I was at the meeting in Vegas, which was an upstanding meeting, if I say so again, that some of the Chinese education stocks looked interesting. This one looks like it's trying to break out here. I think New Oriental Education, EDU, was the other. Nike, Foot Locker broke out with the Bible gap up. Probably means Nike's close to follow. The earnings per share don't look that strong. The chart pattern looks great, and I've learned over the years the chart pattern usually discounts things that I don't know about that might explain that. United Rentals, this is one of my holdings, and I've held this for a long time. And I probably need to pinch my nose a little bit because I've held it through some rough times and pullbacks. I got into the stock back here, and I made it through a couple of pullbacks. This is a stock that, if this economy turns around, they've made a number of acquisitions, and they don't rent furniture for your home. They do a lot of the construction rentals. And they've got some great earnings per share growth anticipated over the next couple of years. And I'm going to stick with it, although this was not a fun time. It looks like it wants to break out and move higher. Activist, Watson, you should be in this already if you watch my calls. Great generics property, continues to move higher. MasterCard and Visa both look great. Here's MasterCard running right up its 17-day moving average. You know, at some point these guys are going to stop running up, but until then they remain compelling stories. SoFund Holdings, I've got a pretty big position here. Sometimes you just get lucky. I got mine at 45, went sideways, and then I caught this move up here. And I started looking at these earnings here, which I discount. I just think we don't have them yet. Good earnings per share growth. It looks like it's going to slow down, and I'm going to be setting my stop probably right about where I'm sitting here. I don't want to get my stops run by the market makers, but I don't want to give up too much from this point, so I'll probably give up about 4 or 5% at the most. Here's that New Oriental Education, also lower left, upper right. Fit Auto, boy, I mean, this has to go in the buy at your own risk category. It's been a cha-cha-cha, rah-rah-rah stock, clearly a leader, breaking out to new highs, extended, and it will probably continue to go up until it stops. Storm Ruger, a nice move off the squeeze here at 5,217. Ammo and pistol maker. Precision cast parts, some of the alloys used in the airlines, lower left, upper right. Pocket pivot, multiple kahunas, looks like it wants to run. RTI also looked good. Synaptics, a pullback. Now this one I actually made to my buy watch list, which I'll show you in a second before I say goodnight. Pullback here, confluence of moving averages broke out here on Friday, the kahuna on Thursday, pocket pivot on Friday, DI crossover, all green. Don't like the fundy story going forward, but it's had some great earnings of late. Every notebook I buy, and those that know me know I buy a lot of notebooks, has a Synaptics pointing tool. Yandex, the Russian internet play, didn't like it on the run up here as it got extended, but it's pulled back. Might be something to watch. A kahuna on Thursday through the 50. It broke above the 50 on Friday. If it can hold this level, maybe it continues its uptrend. Spirit Airlines, pick your winner. Spirit, JetBlue might be winners in the AA, American Airlines, US Air. Settlement, as it might free up some space at LaGuardia in DC that may help this. This one that has a good chance of being a winner here. Giving you some sideways motion. Had a Kahuna come in Friday. I still like Delta, but Spirit has some earnings that looks kind of interesting. SM Energy is one of those smaller energy plays. Nice run up, going sideways. Great earnings per share growth. And Generac is the generator maker. Sort of a prolonged flag here. Looks like it's had a red candle high on Friday, so after a Kahuna and a good update on Thursday. Not sure which direction this is going to go. I'd like to see which way it breaks. And Priceline, what a great leader. But boy, it's an expensive stock. But it grows at 20% a quarter, trades at a multiple of 30, so it's probably not too expensive. And that's it. So that was my group inclusion filter, which basically takes all my watch lists that I have on a given week, which are lots of them, and says if these are watch lists of great stocks, then can we get an idea of what are the best stocks based upon those that I spend most of the time in my watch list? And these are the ones that are in most watch lists. Lots of biotech, internet software, pharma, just like we looked at in the top-down view. So a couple of HGSI lessons, and then I'll show you my buy watch and say goodnight. One of the great things about HGSI is the ability to make your own groups. And then in your groups, you can create an index. So one thing we can look at is the canaries. So Apple, Amazon, Facebook, Google, LinkedIn, Netflix, Priceline, and Tesla. Many of them are being weak now and hurt now, but I think we can all agree that during this year, at one time or another, these were the darlings of the market. So we can take a look at an index, create an equal dollar value. And what do we see is that the canaries, as Ian mentioned in his blog, have broke hard, broke below the 50-day moving average. Now that could have portended doom for the market, but I think these are the big MOMO plays, and we know that every time the market corrects, the momentum stocks get clobbered. But you notice it held here at the hold on a second. The dashed red is, I believe, a 45. But let me see if I can find it. I put that on recently to play with, or 34. Come on. 65-day, I'm sorry. Held right at the 65-day EMA. It looks like it might want to bounce. So that tells me there might be some support underneath this market. The other list that we put together of more leaders, not the canaries, was the LLUR list right here. And if you were at the HGSI meeting, you already know these. And this is really a broad-based leaders in the market list. And we use this because when this list breaks down, we know the market's going to roll. And despite the weakness in the market last week, we're nowhere close to the 50. Had a DI crossover on Friday, Kahuna on Thursday. Bongo Daily is red. It says we've pulled back some. But we've already had a move from the October meeting to now, and at worst case, it's going sideways, not showing that it's rolling over. So on that note, I want to go back to where I started, if anybody's still alive out there, as they would say if I was Bruce Springsteen, which I'm not. George Lee and I are seriously considering a meeting in New York in February. Now, there are other meetings. There's the HGSI meeting that is in late March. It looks like Ian and Ron are up for another. There's the Orange County meeting from Greg Mills, of which George and I often speak at, which I suspect will occur the week before the HGSI meeting. There is the Magenta Summit in Southwest Florida in March. But you also have the New York Traders Expo in February, and my condo has a meeting space which will help us to keep the costs, we hope, reasonable. So you see my email address. If I'm not asking for a commitment, I'm asking for a level of interest. If you think there's at least a 50-50 shot that you would like to come into New York the Friday before the Traders Expo, those that get in during the day will have a session from 6 to 9 Friday night and get to know each other. But the meeting itself will be Saturday and Sunday. Monday is President's Day of Traders Expo, and you can certainly hit the expo in the exhibit hall, or you can head home and go back to work on Tuesday. Let me know level of interest, and next week I hope to have some further information. We don't do these to lose money, but we don't do them to make a ton of money. Both George and I like to give back. So there will be a cost to the meeting, but we'll keep it as reasonable as we can based upon the cost of putting the meeting on. There is my email address. And the only other thing I'll do before I say goodnight is let you look at the stocks that I thought were interesting on my buy list. And we probably looked at most of these already. So I'm going to just put them here. I know it's hard for you to see, but it's probably not impossible. You can stop. These are the ones that on my exhaustive, and I mean exhaustive, review of the market, looked at about 700 stocks, looked kind of interesting. You notice the top stocks were those biotechs. That GENT is a small stock, and its volume is only 162,000, so it'll never make it on the force. But Biogen, Celgene, Gilead, and then another small one, Sinovac, were some of the top stocks that I saw. We'll just switch down here at the bottom. And many of these we've talked about all night. So at this point, I'm going to say good night. Have a great, safe, healthy, and happy Thanksgiving holiday. I'll send out an email with the link if I do a webinar or a video next weekend. I'm planning on not doing it, and we'll see you in 2 weeks if I don't. So everybody, take care and good night.